In this short presentation, we're going to compare Apple to the IT sector to define just how important Apple is to information technology. We're going to start with the second quarter of 2012, compare Apple to IT there, and then transition into the third quarter of 2012 and compare Apple's influence quarter over quarter accordingly. The conclusion, we expect, will reveal something about the IT sector and the growth rate from both an EPS and revenue standpoint going forward. This is a snapshot of all stocks and sectors for the second quarter of 2012. It shows us that on average, all companies reported gains of 4.13% in EPS for the second quarter of 2012. That compares with revenue growth of 2.39%. We have further broken this down by sector so we can look specifically at the IT sector during the second quarter of 2012. Compared to what most companies did, information technology outperformed significantly with a 6.89% average EPS growth rate. At the same time, revenue grew by 4.69%. Each of these handily outpaced the market overall. However, something very interesting happens when we narrow down the reasons for that outperformance. There are two stocks at the top of the performance list for the second quarter of 2012 in the information technology sector. Those are Seagate and Apple. In fact, from our research, it is because of Apple that Seagate experienced such substantial growth year over year. So, if we were to estimate just how influential Apple was over the information technology sector in the second quarter of 2012, it would be reasonable to remove both Seagate and Apple from this particular observation. If we did that and recalculated, a completely different picture is painted. Recalculating without Apple and Seagate makes the information technology sector in the second quarter of 2012 look substantially different than it does otherwise. In fact, those two stocks alone accounted for more than 6% of the growth that appeared on the surface in IT. Without Apple, the question is, will the growth rates be reduced to what we see here? Specifically, without Apple and Seagate, the IT sector only grew at 0.53%. This is on an EPS basis, and it considerably lags the average EPS growth rate of all companies. In addition to that, revenue growth lagged considerably as well, coming in at only 1.55%. This was for the second quarter of 2012. And we have proven that Apple itself had significant influence over the IT sector. But what happened in the third quarter? In the third quarter, the information technology sector largely kept up with the market itself in terms of EPS growth. In fact, it outpaced the market itself on a revenue basis. But just like we did last time, what happens when we remove Apple from the equation? Notice that Seagate is right up there again. So is Western Digital, arguably also a beneficiary from Apple's growth. But let's see what happens when we just remove Apple from the equation. IT EPS growth was only 1.39% versus a market that grew at just over 4%. Without Apple, IT's revenue actually contracted by 0.46% versus a growth of 1.94% for the market as a whole. Given what's happening with Apple right now, the question is, will the performance of the information technology sector suffer as a whole because Apple is starting to slip? If Apple's earnings growth decelerates, if that also affects companies like Seagate and Western Digital, then the EPS and growth rate of the information technology sector is also likely to suffer and be reduced to what it would be without Apple, as we have demonstrated here.